Okay, so next thing we have to do now is fill in the table with the depreciation for each year for the vehicles. So we're going to have vehicle number 1, and that value is 50,000. The rate of depreciation is 15%, and that's going to be the annual rate. So you're going to multiply by 15%, which is the annual rate for 12 months. So 50,000 multiplied by 15% gives you 7,500. So the depreciation for vehicle number 1 for 2012 is 7,500. It's going to be the same for 2013, same for 2014, same for 2015, same for 2017, or 2016. 2017 then we're going to have to calculate because we only had it for 7 months. So it's only going to be 7/12. So it's going to be the value, which is 50,000. Multiply that by the rate of depreciation, which is 15%, and then multiply for how long we had it for, which is 7/12. So it's going to look something like this. It's going to be 50,000 multiplied by 15%, multiplied by 7, divided by 12. And the rate of depreciation then is going to be 4,375. So you need to calculate the depreciation pre-2016 because we're only asked to do the depreciation of 2016 and 2017. So that's going to be accumulated depreciation for the 4 years. And then we need to calculate the total depreciation because this car we got rid of, or this vehicle we got rid of. So you need to find out how much the total depreciation is to put in the disposal and accumulated depreciation. So debit your accumulated depreciation and credit your disposal. So the next one we have to do then is vehicle number 2. So vehicle number 2 then, we're going to calculate in the same way. So vehicle number 2, we're going to take the cost, which is 66,000. We're going to multiply by the rate of depreciation, which is 15%. And then we're going to multiply it by how long we had it for 2013, which is 10/12. So we only had it for 10 months out of 12 instead of the 12 months. So it's going to be 66,000 multiplied by 15%. Sorry, multiply by 15%. Multiply by 10 divided by 12. That's going to give you 8,250. And then we calculate for the year then, so 66,000, multiply that by 15%. So 66 multiplied by 0.15 gives us, 66,000, so I need to put 66. Gives us 9,900. So for the rest of the 12 months, it's going to be 9,900. So we just fill them in as we go along. So 9,900, 9,900. So you need to get the total for these three because that's going to be the total accumulated depreciation. We don't need these depreciation for vehicle number 2 because we didn't get rid of it. So you only get the total depreciation for the vehicles that you got rid of because that needs to go into your accumulated depreciation account. And that's going to be your second vehicle done. So then for vehicle number 3, for vehicle number 3, so I'll bring it down here. Vehicle number 3. So vehicle number 3 costs us 74,000. So it's going to be 74,000 multiplied by the rate of depreciation, which is 15%. And we only have it for 3 months to start off with, so you multiply that by 3/12. So in your calculator, you're going to put 74,000 multiplied by 0.15, and you're going to hit equals. Then you're going to multiply that answer by 3, and you're going to hit equals, and then you're going to divide that answer by 12. And you're going to get 2,775. And then we're going to have to calculate it for the full year. So it's going to be 74,000 multiply that by 15%. So equals 74,000 multiplied by 0.15. So it's going to be 11,100. and then we add them up. Okay, we're looking at 3 months, just bring that across, and then because we got rid of this, we need to find the total depreciation for the 3 of them. And that's going to be vehicle number 3. Next vehicle then, vehicle number 4. So it costs us 86,000 multiplied by 15%. We only have it for 9 months, so you need to multiply that by 9/12. So when you calculate it, you should get so 9,675. Then we calculate for the year. So 86,000 multiplied by 15%. You get 12,900. Okay, we also have to do vehicle number 5. So number 5, which costs us 90,000, multiplied by 15%, multiplied by 5/12, because you only have it for 5 months of the year. So that should give you 5,620. Okay, once again, we don't need a total of that because you didn't get rid of it. And the last one then is your refrigerator. Now just be careful with the refrigerator because sometimes they calculate this differently, depends on the question. So if we go back to the question. So in the question it says that this refrigerator unit was depreciated at a rate of 30% of cost for each of the first 2 years and thereafter at a rate of 15%. So we have to do 30% for the first 2 years. So it's going to be 22,000. Multiply that by 30%. So for the first 2 years, it's going to be 6,600. For the next 2 years, it's going to be half of it. So it's going to be 6,600 divided by 2. So 3,300 for the next 2 years. And then we only have for 7 months at the end. So it's going to be 22,000. Multiply that by 15%. Multiply by 7 divided by 12 because we only have for 7/12. Remember, the rate of depreciation goes back down to 15% after 2 years. So 1,925. We need to find the total of that because we got rid of the refrigerator with that vehicle. I think it was vehicle number 1 in the question, so we need to add them up. Okay, and we also need to have a total depreciation for these 3 figures to help us calculate the cumulative depreciation. So that's all the depreciation that we have to calculate in the question. So we worked down through them, got the cost multiplied by the rate and multiplied by how long we had it for. So now we have to find the cumulative depreciation. So we're going to add up this column here. So the pre-column, pre-2016, to find the opening balance for the cumulative depreciation. Then we need to find the profit and loss or the expense for the depreciation for this year. That will go into the cumulative depreciation as well. And then we need to find it for 2017 as well. So just going to add these columns up. Just the depreciation in the column for each one of the years. So this figure here is going to be your opening balance in your accumulated depreciation account, and that's going to be credit. This here is going to be your expense in the profit and loss for 2016. It's going to be on the credit side as well, in the accumulated depreciation account. And then this here is going to be a profit and loss balance then as well for 2017, and that's also going to the credit side of the accumulated depreciation account. And that's your table filled in. Okay, so make sure that you get the cost, multiply by the rate, multiply by how long you had it for. If it's for a full year, you're just going to multiply it by a percent, because that's the annual percentage rate or the annual rate of depreciation. So it's going to be 12 months anyway. So you don't have to multiply by a fraction like you do with the other ones with 9/12 or 10/12 or 7/12, how long you had it for. Okay, in the next video then we'll transfer these figures and we'll put them into the correct T account.